If I look at the numbers in terms of the private sector credit, so the latest numbers that we have is up until July 2023. So I'm looking at the months of February to April. The average net increase in the private sector credit was around 55.9 billion shillings. So that's about $375 million, thereabout average increase per month. But if you look at the data from May to July, that comes lower to around 10.2 billion Kenya shillings. So that's an equivalent of 69, 68, $70 million per month. So I'm seeing that the negative impact of the tightening that we have seen in the economy, the current tightening cycle in Kenya started all the way last year in May. So that has had a significant impact even in the tightening of credit, to the extent that you've seen that the net increase in the private sector credit has come lower than where we were starting the year.
Do you think we've essentially peaked in this particular tightening cycle for the central bank? Is this it, or should we expect maybe, barring some sort of unforeseen downside risks, maybe in the short term, in the next 6 months, do you think this is it? Have we peaked in this rating cycle?
I think we can go and call a peak at the of the tightening cycle, 10.5 percentage point, 10.5% as it is currently. Seeing inflation has now come within the target levels. In terms of the outlook, not outsized negative impact from the El Nino, the weather effect. That is where there could be some upside inflation surprise. I think by and large the tightening cycle has already hit a peak at this point.
Okay, I want to get back to something that we just mentioned here, that that the efficiency of the rate transmission mechanism. And the reason I'm asking that is this, because you look at short-term rates using recent bond auctions, for example. In fact, as we're talking, the central bank has actually just put out a prospectus for a reopened auction for a reopened 2-year and 5-year bonds. And I know the coupon rates on that were closer to 17%. So if you've got government coming to the market and borrowing at 17%, right, but retail lending rates among banks are essentially still below that. I can still go to my bank and get a loan at 14, 15%. That kind of market dislocation, how do we correct it? Because it can't really last for long, can it?
Yeah, definitely. There's a bit of a disconnect between what's happening in the government borrowing space vis-a-vis what's happening in the private lending space. So if you look at the fact that there's been a cumulative 350 basis points increase in the base rate since May last year up until right now, and if you look at the average lending rate, something to what you alluded in your question, we've just seen an increase by around 130 basis points increase. So there's still much to catch up in terms of the banks now starting to pass on the higher lending rates as telegraphed by the Central Bank of Kenya, or central bank rate, to their borrowers. So that hasn't been a one-to-one or a linear transmission of the CBR to the lending rate. We also heard from the cabinet resolution yesterday that the recurrent borrowing is expected to be reduced by 10%. So I don't know whether that was a directive. So those are some of the work that we see to accompany the talk that so far has come by the government. So those are some of the indicators that we'll keep monitoring to see if at all rates will remain sustainably at these higher rates, or we could now start seeing them coming lower.
But how credible, in the eyes of the market that is, but how credible would that pledge to essentially cut spending by 10%? That essentially what the government is saying here is we're going to reduce our spending by X. But we've heard these arguments around fiscal consolidation before. And then you look at the budgets that come out in the budget policy statements, and what we see are wider deficits, not smaller ones. We see expanded recurrent expenditure, not reduced recurrent expenditure. So those pledges to cut spending, are they really credible, though?
Yes, you raise a valid point, and this takes us back to November last year, when the new government had come in place. And then initially we had, no, not November last year, but I think August or September last year. And there was that famous 300 billion reduction in the spending in the last financial year, which turned out that It was just some. It wasn't the full picture of the entire situation. So right now, I think there's a bit of deficit credibility deficit from the government's point of view.